Robschild. No investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro, technicals, and of course, a touch of crystal ball gazing. Today is Monday, February 24th, 2025. Today's episode begins with Run to Safety continues and strengthens. What I'm referencing is mostly the fact that Treasury bonds continue to show a little bit of strength along with gold, and risk assets seem to be weakening to some degree, not completely. We'll go through the charts momentarily. Next thing on our agenda, I just wanted to mention that on Wednesday at 12 p.m. we have the M2 money supply of January report. This is a report that sometimes I think can go under the radar, largely because MarketWatch doesn't post this, I don't think, as one of the main economic news events. But also Wednesday we have NVIDIA earnings coming out after the close. You know, the whole adage, follow the semis. This is the biggest semi. If they show weakness, this could be, a .com, burst kind of thing, especially if earnings surprise us to the downside. Also, we have Thursday, the M2 velocity coming out for January. And then Friday is probably really the most important number coming out this week, the PCE, personal consumption expenditures. How much are people spending money? It's the Fed's favorite way to see where inflation is and where it's going. It's known as the Fed's favorite leading indicator, really. No major changes in the daily reminders. Watch macro update to 1125 to hear me read through these very important things. And watch portfolio update to 1125 to hear me read through my crystal ball readings and my portfolio and explain all of it. Again, no changes. Diving straight into the charts with the SPX, the S&P 500, very, very notably. Wednesday and Thursday looked like we had broken above the 6100 level with some strong looking candles. It's one thing to poke your head above it and go straight back down. It's another thing to poke your head above it, stay above it, and then have solid green candles after. This is a very, very bullish signal. And the fact that we were able to crack through it very, very, very strongly on Friday suggests that this line is nowhere near as strong as Mr. Market had been feeling about it. One thing I didn't mention, and I wasn't really aware of, I kind of forgot about, we had options expiry date on Friday too. So it could have been institutions dumping to make, call contracts worthless to get, the sweet spot so they can make as much money off of all of the options contracts that they sell. If that was the case, maybe we would have seen some more strength today in the S&P 500, and instead we have some continued downside. This is looking increasingly bearish for the stock market. However, when we take a look at the advanced decline line for market in and out, you can see this candle over here represents today, and the advanced decline line actually ticked upwards, suggesting that there are, less stocks bearish than the entire market. So for the bears to really be right, we want to see the advanced decline line actually tick back down, something to keep an eye on. SMH as well, semiconductor ETF index, or index ETF rather, of the semiconductors. We had these two back-to-back pretty big red candles also showing equal weakness. Another spot I like to check is more risky assets. So ARK-K, the flagship of Cathie Wood's innovation stocks, also going down without much turbulence. You think some of these areas would hold up. We just cracked right through everything. The ice has broken. I noticed the VIX, the volatility index, has been actually gaining strength from Friday and today with continued green candles. You never know how far the VIX is going to go up before you have the top, but this wasn't one of those situations where it was one big candle and then a lower candle. No, we have a up candle and then a higher candle, so increasing volatility as it is. TLT still my favorite place to be, continuing to build what looks like healthy strength. When you see, taller candles are stronger. When you see larger green candles, that's like the bulls are taking in charge, and they're not being. This isn't a knee-jerk reaction. This is starting to look more healthily bullish. And of course, TNX, the Treasury note yield, equally going down. If I expand this a little bit, you can see that we haven't been this low in the 10-year Treasury yield now since the middle of December of 2024. My guess with my technical analysis and my crystal ball and all, I have this white line here representing this head and shoulder stop. This white line here is equal to this line, so the current downside target it might be 4.3 at the moment, before we at least see a little bit of support in the yield or resistance on TLT. So although the stock indices are showing some significant cracks, the high yield credit spreads, the spreads between junk bonds and Treasury bonds, it did spike today, but not crazily high, not yet anyway. So this is another indicator to keep a close eye on. Are we continuing to spread from this point, or was this something that'll just turn around the other way? I will say 2.78% is not wide credit spreads for junk bonds. It's historically tight still. And as I said before, for the real bear market of stock indices to be like more obvious, we need to see credit spreads widening. And although they widened today a little bit, we need to see continued wideningness to gain confidence that the market's really bearish here. I talked about getting strangles on Bitcoin yesterday, and I responded to a commenter after my video saying I was going to buy a strangle today, and I had my finger on the button like 10 seconds before market close, and my order, I wasn't able to get my order in on time. I was going to actually get a strangle, and as it stands, I mean, if tomorrow we're still at 92, I'd sell the strangle, because we've already had, this is a pretty big move down. I mean, what is this candle down 4.9% in one day? I said this can't go straight forever, and when it breaks out, it'll break out big. Now, actually, the funny thing is that I was expecting a larger breakout than this. I was thinking that because of the length of consolidation of this, that this candle would have driven straight through the bottom. The fact that it didn't tells me that I don't really know what's going to happen from here. So I'm not doing any options plays. I will note that Monday's official candle for UTC time, it did close below the previous low of the intraday candle of February 3rd by just a tiny little bit. This would normally signify that it is more likely to continue down than not. But now that the volatility has obviously increased, the strangle prices are going to be too high for me to get back into that trade. So unfortunately I missed it, but it's okay. I'll live to see another day, and there's always more opportunities. Another chart I mentioned Friday, when I want to see, if markets really are getting bearish here, the stock markets and that kind of thing, and there really is a run to safety, I kind of, would like to see a run to the dollar. Not quite seeing that quite yet. It's going up, but this is still very much within a downward formation with lower highs and lower lows. So if this starts getting strength from here, again, that's another sign maybe the markets are going to continue to fall apart a little bit. Oil, because of Friday's big engulfing red candle, it's going to be hard for any bulls to get back to the top or above. And as long as we're still in this range for a while, probabilities favor that we are headed still lower in oil, crude oil. Dr. Copper with a PhD in economics. You got to take him seriously when he moves around. Also going lower, suggesting global economic slowdown. The second to last candle is actually the Monday candle, because again, this is on UTC time. But today's red candle, it might have to do with Chinese equities got hit a little bit today. We'll look at that chart in a second. It's more of a gap fill than anything. But overall, in copper, I mean, what does this look like, friends? This is a pretty obvious looking blow off top. So you kind of expect to get to the last area of support, which I don't know, might be a line right around there, or a previous fight zone, something like that. It looks like copper's still headed lower. Also, a little engulfing candle on silver, plus today's candle. Again, this is Monday's candle with another closing low. Looks like we might be headed lower in silver. As I mentioned in the beginning of the show, a strengthening of running to safety. What I meant by this was this green candle here represents today's Monday's candle. I thought with these three little dojis, hey, maybe we're rolling over here. I mean, granted, today's close was not at the top of the wick of this doji, but dojis aren't as strong as topping tails, and so gold looks like we're actually gaining a little bit of strength to my eye. Again, risk off and run to traditional safety, not Bitcoin. We always wonder if there's going to be eventually we're going to see a perfect correlation with gold and Bitcoin. Now, Bitcoin is, I think it'll forever be more of a risk asset than anything else. Again, Lynn Allen, has discovered that it ties closer to global liquidity. It's actually the best measure of it now, better than the previous best, which was the S&P 500. So when the S&P 500 is crashing, going down, it's sort of saying global liquidity is tightening. And now Bitcoin is actually a better indicator of that. And that's another thing with Bitcoin dropping. It's another sign. But again, Bitcoin could easily pop right back up from where we are. It's impossible to say. I don't know where Bitcoin is headed. And again, I thought that this red candle we had today would be actually a lot stronger than it was. So if a run to safety continues, the TIPS bond ETF versus gold price, these alligator jaws here, if they're going to chomp shut, well, if gold keeps going up, the only way they can chomp shut is if TIPS go to the moon, which would mean bonds to the moon, yields to the ground. It can play out that way. We're set up for it. This is the year of the dragon, the year of the bond king. But I'll wait to put on my crown for when I sell. The day I sell all of my bonds, I'll become the bond king, and then I won't be the bond king anymore because I won't have any more bonds. Another thing, the Fed funds futures, you always got to check, like, is the market selling off because they're worried about a Fed being tighter? No, actually, from yesterday to today for the May contract, for example, let me see if I can zoom in on this a little bit. You can see the previous day had a... Oh, no, I'm wrong. Well, okay, so we didn't increase a chance of a cut. We actually decreased it, but by a very, very, very small amount. This isn't a huge amount, not enough to set the market crashing as much as it did. I mean, for example, last week's probability of one cut to this week's probability of one cut actually increased by 10 points, 10 percentage points, from around 18% to now 27%. So I don't think we're selling off because of a worry of too much tightness. On Friday, I was gleeful about K-Web going up 3%, all while the S&P 500, like every other market, was crashing. It's like, yeah, China. And then today it drops by 6.4%. Again, this in general, this fund K-Web, it's more volatile, obviously, than the S&P 500. But I will say, there is something. Gap fills are real and they are powerful. You know, you have a bunch of people that were in between the price of February the 13th and Friday the 14th that they didn't get to fill their orders. They didn't get to sell. They didn't get to play around in this area. And so we went exactly to the top of this green candle. So the expectation would be to play around in this area and then decide, are we headed back down or are we continuing higher? Hope you guys like my new setup. It's a little cleaner looking. I've also decided to invest some of the donations back into the channel, and you'll see some of those upgrades momentarily later this week, actually. Thank you again. Thank you for all of the support, all the likes, all the subscribers, all of the donations, all of the comments, all the views. Thanks for watching. That's all from me and my crystal ball for today. Hope you enjoyed, and see you next time. Robschild.